All right, guys, I should be live and in living color in the on your screens right now. So let's go ahead and just welcome everyone into the room and get prepped for the class. And if you're here, let's see, Chad already put something in the chat box. Chad, can you maybe give me confirmation that you can hear and see me? Okay, and from there we'll just kind of hang out a little bit and shoot the breeze and get ready for the class here at 9 o'clock. Okay, cool. Yeah, it's a pretty good setup where I can switch from the camera on my computer to the screen, the slides, and anything I want to share with you that's on my desktop. So I really like doing it this way, opposed to the old way I did it. I could only share what was on my desktop, which was pretty lame because it adds more of a personal, kind of a, if you can see my face and puts more of a human element to it, I guess, than just a screen share. So I hope everybody's had a good day. I did it at 9 o'clock, just in case any of you are wondering the reason why I'm doing it at 9 o'clock. Although 9 o'clock isn't really that late. It is later than I typically do webinars because I had some folks from the West Coast that bought a seat for the class asked me to, it's any way possible to do it, as late as possible in the on East Coast time, so they could have the best chance of attending. So this is about as late as I could do it, and still, still be sharp, mentally. If I started at 10, I don't know, I might be starting to get a little bit tired, it's kind of, I'm starting to wind down a little bit. So I want to be on my A game for you guys and sharing my best stuff with you guys in the best state of mind that I possibly could, as well as being, most accommodative for most amount of people possible. Okay, and of course there will be recording and all that jazz. I'm gonna pay someone to transcribe the whole thing, so you have a transcription where you can just kind of like read the transcript of the event. Some people like to read through the transcript, so that'll be available to you here next few days, just as soon as I can get someone to do that for me for a fee. So, okay, Don says sound okay, video okay, awesome. And so, wow, sell off in the markets today, huh? Caught me flat-footed, I have to admit. So, the question is, are we going into bear? I shouldn't say bear market, but another downtrend. I think it's too early to tell. But the one thing I do know, being in a slump right now, like I am with some of my options trading, it makes it hard to think. It makes it hard to make decisions because bad decisions are waiting on you. But one thing I was thinking about this morning is that this is a relatively new headline item, this Italy debt crisis, and potentially, leaving the Eurozone. We dealt with this with Greece over the last, probably since 2011. It's probably been reoccurring at least 3 times with Greece, and the markets went into a tailspin over it. So, I don't know if we're in for another chapter of that, but if so, it could get really, really volatile this summer. On top of that, oil prices have peaked out, and they got the OPEC meeting coming up on, I think it's June 12th. Yeah, June 12th. Let's double check that. We'll talk about that in a minute as a trade catalyst, but oil prices, the market itself, prices, in the SPY ETF, this market in general, getting real kind of whipsaw-y. That's a word. It's not, but I'm using it as a word. So it's getting really whipsaw-y. And, you know, this is the environment that we're in right now with trading, and you know, love it or hate it, that's where we're at. I thought volatility was going to start to drain out now after about 6 weeks straight of volatile markets, but now you've got a whole new headline that's essentially like a tape bomb. You know, if you don't know what a tape bomb is, so that's you know, going back to the old days when the actual prices of the market was printed out on actual, like, a ticker tape, right? So every, I don't know, every second or 2 seconds, whatever, it would spit out of this machine. And so that was the prices of stocks was, you know, it was spit out on this little ticker tape. And so they call it tape bomb is a piece of news that comes and just, you know, totally explodes prices in one way or the other. I think pretty much what they mean is usually to the downside when they're talking about a tape bomb. But, you know, a tape bomb is a big piece of news. So this Italy stuff is kind of a tape bomb that happened over the weekend. And that's why you had that big gap down this morning. Thomas says it seems to be repeating. No, it's not a video, it's live. Maybe you have two windows open, I'm not quite sure. You only want to have one tab open with, you know, me in it. So this is live. And so yeah, you know, never a dull moment in the market. Cryptocurrencies, kind of like the state of the market with the cryptocurrencies. You know, I was posting about this the other day, but I think, me personally, my opinion is that by this point in May, everybody was thinking that we were going to be going back towards 10K and above. If you had looked at all the previous patterns from, say, the last several years, excluding 2014, at this point of the year, where the Bitcoin and crypto was starting to make new highs. Well, guess what? We're not, right? So people are starting to, I think, get discouraged and sell. So that's why I think we almost broke. You know, we almost had a nice flush over the weekend. We didn't quite get there, but you know, prices are still pretty depressed for the year on BTC and the others. Yes, SPY crushed me today. And I can't guarantee that I might have to pause you guys here for 30 seconds or so during the webinar to maybe grab a drink of water or something like that. But I'll be here with you. So if there's, like, if you have to walk out of the room and I'm not running my mouth for some reason, just kind of hang tight. I'll be right back. So let's see. Just sent a last minute email just in case there was some problems with everybody being added to the proper email list after they purchase, which happens sometimes. So I sent out an email manually. I kind of BCC'd everybody in that email that bought a seat to the class, and so hopefully there's some of you that are here that maybe didn't get the email earlier today, letting you know about the class. And so I'll double check all that later, but I just want to make sure everybody got at least 2 reminders today about the class. There will be a recording, there will be a transcript, and I will be sending out some emails to you guys in the weeks to come, probably for about 3 or 4 weeks. Sporadically, I'll send you a trade that was triggered by a hack, so you can see, you know, how it happens and everything and how it plays out. And I mean, I'll show you some right now tonight too that have already played out, but something that's actionable for you guys. Okay, so it's 8:59. We'll just give it one more minute. Let everybody give everybody a fair shot here to be here for the start of the class. And So far, let's see. See a lot of names that I recognize. Mark, Chad, Chandra, Patricia, Michael, two Michaels, Mark, Kevin, Koljit, John, Ileana, Thomas, James, Don, David, Steve, Christian, Brian, Richard, and Arden. Excuse me. So welcome everybody. This is the Trading Hacks class, and all of you that are here tonight, you want to be here. You've proven that because you were willing to invest in a ticket for this class. And so I'll do my best, not only during the class tonight, but over, like I said a minute ago, over the next couple of weeks or so, to follow up with you guys and make sure that everything really has kind of sunk in and got to a point where it can be actionable for you. Because if it was just, kind of come into class, okay, that's nice, spend some time with Matt, he's a really cool guy, hey, that's all well and good. But at the end of the day, you want to have information that you can absorb and then implement. Because if you can't implement it, then it's just kind of something that maybe kind of just hangs out in the, in the left hand, left corner pocket of your brain, and maybe you think about it again one day and use it, maybe you don't. But I don't really want that to be like this. I want this to be something concrete and actionable for you guys. And also, of course, I want you to get plenty of value for your investment in this class. All right. So I want to hold up my end of the bargain. I want to over deliver. Tonight when we're done, of course, you'll have a lot of information, but of course, the real value comes in the results that you get from the tactics and strategies and the hacks, right? Which is like a fun way of saying tactics and strategies, right? That I'll teach you. So that's where you'll get, of course, the value for your money, right? So, so a couple more folks have hopped in the room here just in the last, looks like 60 seconds or so. So that is awesome. Let me go ahead and switch my screen to the slides and get my desktop arranged here in the way that it needs to be. So I'm nice and organized. Let's see here. I want to share the Trading Hacks class. So I'm going to click that right there. And as a result of that, you guys should see my slide deck right now. Anyone else? I'm sorry. I mean, anyone? You guys just confirm you can see my slide deck real quick, and then we'll roll into the class. So I switched the camera from my mug to my screen, so I just want to make sure you guys can see it before I move on. So somebody can just give me a confirmation in the chat box. That'd be wonderful. Okay, Patricia says yes. Anyone else? Okay, Don says yes, he can see. Okay, great. All right, so if you have any problems throughout the webinar, guys, remember, only have one tab open with the webinar, not two. And I don't recommend tablets or phones for this. If you happen to be on and you're on a tablet and a phone is working, that's great. But I don't recommend, like, say, switching from your desktop or laptop to a tablet or smartphone. I don't recommend that, because just, I don't know, something about it, just is too much data to go through a laptop or a tablet or a phone for some reason. So, all right, guys. So, and then make sure you have Adobe Flash enabled as well. Obviously, you do if you can hear me and see my screen, but for some reason something goes wrong, you want to have your Adobe Flash enabled. Okay, so this is a Trading Hacks class. These are my best secrets and tactics to help you churn out fast profits from trading. Okay, presented by me, Matt Morris of MM Publishing Inc. And so first thing I want to do, is go ahead and get to the disclaimer. And so, of course, it is copyrighted. There is, U.S. government required disclaimer. I'll let you guys read that. It has large potential rewards, trading does, but it also large potential risk. Okay, that includes stocks, options, and cryptocurrencies. Anything else you trade, as a matter of fact, if you trade futures or something like that, which I don't, that's very risky as well. You know, past performance is not indicative of future results. So I'm going to show you some things that have pretty good track record as far as the number of wins and number of losses. But you know, hey, things could go haywire, and you know those numbers could be skewed to the bad side if you know a few trades go wrong, right? So not necessarily guarantee that those win rates will continue, but in any event, I do need to you know warn you about that and put that disclaimer out there and open. All right, now looks like a couple guys getting okay. Some audio, visual. So let me just type here in the chat box, guys. Just bear with me. I'm trying to help these folks that are having problems. Joe and Renee. Yes, I am speaking. Please enable Adobe Flash. Okay. So let's just I'm going to take a drink of water and give the folks because you guys bear in mind everyone did pay for attend this class tonight. So just maybe give everyone just a little bit of time just to get all their stuff squared away here, not to delay anything, but just give everybody maybe 15 more seconds. Okay, so we will go ahead and keep moving on this. So that's the disclaimer. If you have any questions about that, let me know. You send me an email, hit me in the chat box, whatever. Not registered investment advisor, professional investment advice, anything like that for entertainment purposes only. Okay. Okay, good. Thomas is good. Okay, cool. So hack one is my newest one that that I've kind of you know spotted, and then when I spotted it as something that was viable, I started you know taking notes and taking notes on potential paper trades, and then some actual trades. And so I documented all of it, and I'll get to those actual case studies throughout the course of this webinar. But first, let's just go through the bird's eye view. So it's analyst upgrades and downgrades. So what happens is every morning, well, it happens in the afternoon too, and sometimes during the market hours, but every morning there's a fresh list of analyst upgrades and downgrades come out. And so what happens is these can be market moving events for stocks. Now there are some variables, some nuances to it. So the way I want to play this as an analyst upgrade or downgrade is I like it for it to be the sole or most important event of the day for that stock. It's kind of like the thing that takes all the air out of the room. Okay. Oops, this was supposed to be up here. So the format of the webinar is that I'll teach the hacks and then show you how to implement them afterwards. Okay. So, you know, the first one, like I said, analyst upgrades and downgrades. This must be the sole event, the most important event of the day. So what does that mean? That means that I typically don't like to do these trades on the day or day after earnings are reported. Well, I won't do it on the day after if earnings are reported the previous afternoon after the market closes, right? So, you know, because that will be the first actual trading day after earnings are out for that particular stock. So an upgrade or downgrade usually isn't going to have that much of an effect because, you know, everybody's reacting to the earnings. So the analysts, you know, hey, you know, maybe that's having a little bit of effect, but the main thing that's moving that stock up or down that day, morning, you know, the day of if they report that morning, or day after if they report the previous afternoon, is the actual numbers themselves. So I want the analyst upgrade or downgrade to be the sole, you know, most important event. It takes all the air out of the room. That's the thing that people are talking about that stock, right? So if you watch CNBC, sometimes they'll be talking about that in the morning. David Faber will be talking to Kramer and say, oh, you know, Morgan Stanley downgraded Tesla, you know, or Goldman Sachs downgraded Tesla. So some of them are even so noteworthy that they'll be, you know, kind of headline news for financial media. So, so let's get to some examples. So firstly, let's talk about small caps. So I always have a love in my heart, a special place in my heart for penny stocks. And so, you know, small caps aren't too far off from penny stocks. So, but when a small cap stock, it must be a small cap, is upgraded by analysts just before an earnings announcement. Okay, guys, this is a major, major, major hack. Okay, major, major, major. if you only get one thing out of this webinar, if you trade penny stocks or small cap stocks, this is where you need to lock in your brain, your ears, and your eyeballs to this next 5 minutes, okay? So if it's a small cap stock and it's upgraded by analysts or analysts, plural, just before an earnings announcement, though they do not likely have insider information, this is usually a good tell that the earnings are going to be really good and the stock's going to go up, since they would not upgrade a stock, especially a small cap, prior to such a big event like earnings if they did not have the utmost confidence in that stock and in that report that was about to come out. So what you guys have to understand is that analysts have a lot of access to information that you and I don't have access to. It's not inside information because it's information that they curate themselves. Like, for example, I don't know if you guys have ever heard that report a few years ago that came about Walmart, how these hedge funds were trading Walmart stock based off of photographs of how full or empty the parking lots were, right? So that's not insider information because that's information that's not available to the general public, but that's information that they curated. That's information that they gathered themselves, right? So you and I could go, say, stand out in front of Walmart for 24 hours and just camp out there and just kind of count the number of people that come in and out, and then come back a month later and count the number of people that come in and out. And so we could try to make a guesstimation on whether or not Walmart's doing good based on comparing those numbers month over month, right? Which I don't recommend you do that. But you see what I'm saying is they do it in a much grander scale and able to make sense of those numbers that they get. So, and I'm not saying there's not some analysts out there that aren't hacks, hacks in a bad way, and they just kind of pull things out of their backside. But most of them are good at what they do, guys. Okay, so analysts get a bad reputation, but really for the most part, they're pretty sharp people. Okay, so as an example, I hope that makes sense. So as an example, PLNR was upgraded. So I have notes on this going back quite a ways. Was upgraded just before earnings in November 2014, just before earnings. Now, the reason I'm only have this in text, unfortunately, is because this stock does not exist anymore. I don't know what happened to it. They either went bankrupt or they were taken private by another company. But anyways, you guys just have to take my word for it because I did have the notes, I did have the screenshots of this, but those files somehow, are not good anymore. So, but they did get upgraded just before earnings in November 2014. I believe it was 2 or 3 days. The stock shot up 90% after the report. Okay, so that's not typical 90%, but it is possible, right? Some more small cap examples we're going to go through. Zynga. Everybody remembers Zynga, right? They're actually still around. You can go buy that stock if you want to. Not that I recommend it, but it's still around, still trades. And in early 2012, it was upgraded just before earnings and sent that stock slightly higher. Okay, so let's get to some a little bit more descriptive examples. IMMR in April and May 2015 was upgraded just before earnings, and then the stock moved nicely. So here's the upgrade, April 29th. You can see it right here. So this would be late April right here. And you can see the stock moved up, right? Let me make this chart bigger so you guys can see. So sorry, that's overlapping the text there. But you guys can see what I mean. Here, late April, look there on your chart. This stock is, kind of trending higher, but it hasn't broke out yet. And so what happens, earnings come out, and boom, the stock goes parabolic. You can see that big volume surge right there. So that was preceded by analyst upgrades of a small cap stock. And actually, we just played this stock not too long ago for a nice little gain as well. So IMMR is still actually doing good, which is pretty interesting. And then another one is Etsy. So you guys are probably familiar with Etsy, some of you. And so it's been around for a little while. It's had some really, really volatile swings since it became a publicly traded company. But Etsy in August 2016 had an analyst upgrade come in just 2 days before earnings, and the stock moved higher 40% after in the coming days. So it was upgraded before earnings, and then boom, it goes higher. So this big, nice, long, full body candle right here on August 1st, looks like that was August 1st of 2016. That was the result of the analyst upgrade. But you can see one more update, and then this big gap right here that the stock went to $14.57 on. So if you guys kind of squint in, you can see that, and I'll make that chart bigger so you can see what I'm talking about. See how it went to 14.57? Okay, so that was the day of earnings. So you can see that big. So that's a nice little trade range right there. And then it went up a little bit more a few days later up to the 1460s. Okay, so analysts, when they upgrade small cap stocks before earnings, as long as it's not like some analyst that's just brand new, nobody's ever heard of them, they don't have any kind of credibility. As long as it's some kind of, Citigroup. We all heard of Citigroup, right? We all know JP Morgan analysts. We all know Morgan Stanley. There's other ones that, that maybe not as well known, but they're good analyst firms like Jefferies and Cowen and places like that. Okay. This is another one. So I'm going to explain this one, and then I'm going to explain why this is an exception to one of my earlier rules that I stated. So Pandora, this is recent. This is this year. Pandora was the recipient of dual upgrades. So let me make this a little bit bigger so you guys can see this. Okay, so you see that? Pandora P right there, Pandora P. What happens is this is broker action upgrade, broker action upgrade. This is SunTrust and B. Riley FBR Incorporated, so that's an analyst firm. It was upgraded on the same morning. Now this was post earnings, so this is a little different. I don't usually give as much weight to this, at least for a small cap, but this is a dual upgrade. Okay, so and this is actually the morning after, so they report earnings that previous afternoon, if I'm not mistaken. They reported earnings that previous afternoon after the market closed. So the next morning before the market opens, these dual upgrades come out. So usually it's like a 50-50 gamble what way a stock's going to go after it gaps up big or down. But with these dual upgrades, that's so rare, especially for a stock under $10 a share, that I had a really good feeling that this was going to trade well. Okay, so you can see the gap up. I'll make this chart bigger so you can see it. The gap up, as you can see right here in May, early May, it gapped up and then it hit 725. You can see the price label on the chart. Then it went all the way up into the 770s within several trading days after. So the point here is that even though it gapped up and then moved higher that day, it still went up higher. It still went higher the next day, and then a little bit higher the next day, and then the next day, and then the next day it gapped higher and sold off, and then it went sideways, and then it had one more nice day of upside momentum about 4 days later. Okay, so the point is there's still gas left in the tank, even after a nice earnings gap, if you get something like dual upgrades. So dual upgrades would be the exception to the rule if, like I said, I don't want to trade based off one analyst upgrade if it's the same day as earnings. But if I get dual upgrades or dual downgrades, that would be exception. That would be an exception to the rule. Okay, because that's just so powerful that you have two analysts at the same time doing the same thing, that it really just kind of powers the stock and gets that institutional money flowing in there, and will put a bid under a stock really good if it's if they're upgrades, like you see proof of that here in the Pandora chart. Okay. Any questions about this this analyst upgrade stuff so far, other than where to find them? Because I'm going to tell you that later. Does that make sense to everyone? Does that make good sense? And also, do you have a question? I'll just take a drink of water here and see if any questions come in. If not, we'll move on in a second. Okay, Patricia says yes. Okay, so good. So it turns out analyst upgrades and downgrades are not useless information after all, guys, huh? That's just been always one of those things where you just kind of hear about it and don't really think much of it. But Joe says, how do we screen for these stocks? Great question. I'm going to cover that. All right. So it makes sense, and you guys have questions. So I'll get Joe. I'll answer your question. I just want to get the implementation last. Okay. So I just want to explain the concept, and I'll do the implementation one by one at the end. Okay. So hack 2 is binary events. So some of you that have been subscribers to I used to call it Fed Minutes, but I call it Fed Trader Service now. It just sounds better. It makes more sense. But hack 2 is the binary events. So Brexit on the GLD ETF was a 400% overnight gainer if you bought a strangle or a straddle, roughly 400%. So if you remember what happened is nobody thought that British people were going to vote to leave the EU, but they did by a couple percentage margin. And after more than 4 decades, you can see the image from that night. It was a very big event for world markets. Okay, so I just got a question about the analyst upgrades. Are there particular analysts that one should listen to, and are there? Oh, there are several thousand of them. And how do you know which one is just pumping the stock? Okay, so that's a very good question. So going back here, how do you know which ones to listen to? So the ones that I pay attention to are the ones that are listed in the service that I receive my information from. Now there might be some, pipsqueaks out there that, firms out there that put out analyst quote unquote upgrades and downgrades trying to pump or trash stocks, but don't have a lot of weight behind them. So basically you're going to know that by where you get your information from. They're gonna screen out the wannabe analysts and people like that. Someone just throws up a website and calls himself an analyst or something, So with that said, there is a little bit of nuance involved as far as who's an analyst that may be trying to pump a stock. So like there's some backhanded stuff that goes on with analysts upgrading a stock, and those analysts having a financial tie or link or professional relationship, whatever, or just friendship with a firm that owns paper on that stock, or a company that would potentially be looking to liquidate shares on the exchanges of a particular stock if buying volume comes in. Now that does happen. I believe those are what you call sell side analysts. But I think basically we can get too far into the weeds with stuff like that because on the surface, this strategy overall is effective. So if we can I can get into the weeds a little bit further on that and look into that and definitely keep you guys posted on that. If there's an analyst that I find that I need to watch out for, I will definitely let you know. But for the most part, they are they're worth paying attention to as long as you're getting your analyst upgrade and downgrade information from a reputable source every morning. Okay, and I'll lay those out here. Okay. Yeah, so household names. Joe said household names. Now, some may not be household names. Like, I mean, I've never heard of. I can't say I never heard of them, but B. Riley FBR isn't a household name. But it was the one of the dual upgrades. So, but anyways, moving along. So we'll talk more about that later. So again, the binary events on the straddles and strangles on certain ETFs or stocks. Binary events, one of the big ones is a one-time event. Unfortunately, we don't have a Brexit vote every year to straddle and strangle, unfortunately. But big binary events are great to trade. Here's the chart from back then. You can see here, it was June 26th. So you can see that big gap up from 120.06 up here to the 126s. So even though the calls or the puts expired worthless, the calls went up so much it didn't matter. Okay. So binary events. Also, there was another recent one. It was the May 9th Iran deal where Trump made a decision to, as we all know, pull out of the Iran deal. And so oil gapped up and kept trickling up and kept trickling up and kept trickling up for several days after that. So you could have played a strangle or straddle on XLE. It was actually supposed to be May 12th, but the White House came out and said that they were just going to announce the deal, several days in advance of that. Okay. So, the thing is that keep your ear to the ground. You have to know the dates of these things and paying attention to the media and things like that, financial media, headlines, things like that. You'll stay abreast of all that. Another one is a Supreme Court sports betting decision that came down. Was it last week? Was it last week or the week before? I can't remember. I think it was last week, early last week. And so, Penn, I did some research and I wanted to find out which of the gambling companies had, the most exposure to where they would benefit the most from a positive decision from the Supreme Court to allow states to individually decide whether or not they wanted to allow sports betting in their respective states. So you might think, oh, I'm just going to go buy MGM or I'm going to go buy Las Vegas Sands stock, or call options. Well, that would have been the wrong move because they don't have much of a footprint in the United States outside of Nevada, where sports betting obviously is already legal, right? So we wanted to be leveraged and have play upside because from my research, I found that, it was basically almost in the bag that they were going to rule in favor of individual states to allow sports betting from now on. And so I thought, well, Penn has already gone up some. It kind of gapped up there back in late April and was trickling higher. But, just because a stock gaps up doesn't mean it has to fill the gap right away. So I went ahead and bought some call options because this is it was a pretty huge potential decision. I mean, we're talking long time. Sports betting's been illegal everywhere except Nevada, right? So went ahead and bought some call options. You can see these nice big full-bodied candles right here on the edge of this chart. That's the day of the news of the Supreme Court and the few days following after that. So I actually played some call options on this and alerted these to my VIP group guys and gals and did pretty good on this trade. I think it was like 70 or 80% that I made on this one. Okay. So big binary events. Now, on the other hand, it could have tanked if the Supreme Court would have said, no, forget about it. Nevada's the only place where you can do sports betting. Then there's no doubt this thing would have gave up probably at least 5 points back to the 25s. Okay, so, but through my research, seeing that the odds were heavily in favor of this being a favorable decision for companies like Penn National Gaming that have a large presence for gambling outside of just Nevada alone. Give me just 1 second here. I got a wild child here. My wife's going to come get her right now. All right, so sorry about that. But so you have Penn National Gaming that went higher after the Supreme Court decision. Again, I didn't play a strangle or straddle on that because it was just, it was almost, the cat was almost in the bag. But I made the reasonable, I was willing to risk that wasn't fully baked into the stock price. Okay, so that's the binary event hack. Now, you notice that I didn't include earnings in there. Earnings are really tough, guys. Just to go out and buy calls before stock reports earnings is really tough to make work. Over, say 10 trades. If you just go buy call options on stocks before they report earnings, you probably come out basically with about the same amount of money you went in with, or maybe less, unless you hit a real big, anomaly, like a stock that just really crushes it, goes up 50% or goes down 50%, like LinkedIn did a few years ago. Okay, so you notice I left out earnings. So you have to find binary events that other than earnings that are really big for a particular stock or ETF. Okay, So this was the XLE ETF, and this is oil service stocks. So naturally they're going to run higher when Trump says, guess what? No more Iran oil is coming on the market. So boom, that's the green light for American companies to drill more and get paid more for that oil because there's less supply naturally, right? Okay. So any questions on hack number 2 on the binary events? So we talked about Brexit, talked about the May 9th Iran deal, talked about Supreme Court sports betting decision, and then there's a lot of other ones. But that's 3 examples to kind of lay out the strategy. So what I'll do, guys, over the next several weeks, if there's one that comes to mind that I find, that I discover, I will alert you to that to get you guys some additional value for participating in this class and purchasing a seat for the class. So you guys just sit tight. I have all your email addresses saved onto a specific list. So I'll be sending those out to you. So, but hopefully you guys will train your ears to you have your ear to the ground to learn this stuff too, where you guys can listen and watch for big events that are coming up for publicly traded companies, and sometimes for ETFs like XLE. Okay, Michael says, are there any binary events on your immediate horizon? Very good question. Bravo, Michael. That's a very good question. So yes, there is the OPEC meeting coming up next month. So that's a huge event. It's usually not that big of a deal, actually, in June. It's usually the November one that's a big deal. But this year, with oil being so Michael asked me a really good question, and then he said, never mind. Well, I want to answer it. So I want to answer your question, Michael. So it's coming up next month. So that binary event is going to be a potential market mover. It will be a market mover for the oil markets, because with Iran out of the mix for oil supply, it puts more emphasis on the decision from the Saudis. Basically, they have more clout in oil prices based on what they agreed to do. Now, I did hear some things today that actually made a lot of sense, that the Saudis were probably going to agree to increase production by quite a bit because they want to make President Trump happy. So who knows? Maybe that's true, maybe it's not, but it makes sense. All right, Michael, great question. Joe says, general question: how do you know when to stop out? Will you talk about that later? Yeah, so I've seen, I guess if you're talking about options, I mean, you've got to have a really big wiggle room with options. Some of my trades with options, I'll use like a 30% mental stop loss, maybe not actual, but I'll use a 30. I know some people that use 50% stop losses on options. Now with stock, you can be a little more precise. You can like go to previous, support zone and maybe go say 10 cents a share under that, something like that. But it's all based on what kind of target you're trying. What's your goal for the trade? Is it, if you're trying to hit a double or 100 or 200% winner, then maybe it's a trade you don't want to use a stop loss at all. But if it's a scalp, then yeah, you probably need to use some kind of a stop. But we can talk more about that in detail. And so let's go to 3. Number 3 is 9:34. So we need to cover some more ground tonight before it gets too late. So this is pre-earnings strangles. So this is one I've done research on that I have to admit I haven't used it myself. But from the examples that I've studied, this is how it works. So what you do is you buy an at-the-money straddle. So meaning if Apple is trading at 190, you'd buy a straddle so you buy the calls and the puts on Apple at the $190 strike price at an expiration that expires after earnings come out. So you buy that at the money, $190. Let's just go hypothetical. Apple at 190. So buy Apple 190 straddle, expiring after earnings. Okay. So you do that 10 days or so, 10 trading days or so, maybe not on the nose, but you know, about that. So you would buy that before earnings. Now, what you would do is you would hold that right until earnings are basically imminent. So maybe a day or two before earnings come out. So the idea here is that you're going to profit not necessarily from, say, Apple moving up a lot or moving down a lot, which could happen, but you're profiting from the rise in premiums of those options. So what happens is all these people come in the last week or so to buy up options in a stock like Apple just before they report earnings. And in doing so, it inflates the value of those options, okay? Even though the event hasn't transpired yet that everybody's playing, which is the options, you got in so early that instead of which what usually happens when you buy options is that they have time decay, right? They lose value. But it's weird before earnings because that time value actually increases. So what they say is that you're riding the red wave, which is basically implied volatility. That's down there, down here. So ride the wave, the IV rise. Okay, so you're basically profiting from the inflated value of the straddle, even though the earnings haven't come out yet. So what you're trying to do here is you're trying to hit singles, maybe, I guess maybe you could say a double, but you're trying to hit maybe 20 to 30% gains here without risking your neck if the stock, doesn't do anything after earnings come out. Because if you guys have played straddles and strangles before, your worst enemy is for that stock or ETF to do absolutely nothing, just to go sideways, or to gap down and then immediately go to unchanged, or to gap up and then immediately drop to unchanged. Because then both your calls and your puts lose value, right? So this is way different than that. Other than you are still playing a straddle or a strangle, is because you're selling before the event takes place, right? The event that everybody's playing that stock for, and so these earnings events are so big that so many people want to touch these options and play these options. They gain in value just a few days before options. It's like 2 weeks out, people don't care. But say 3, 4, 5 days before earnings, everybody's placing their bets. So you're basically profiting from that. Okay. From the examples I've studied, guys, I actually have done this once and it worked out, and that's how it triggered my interests. So 75% success rate from the examples I studied. Using weeklies or nearest term options for the biggest percentage gain, but of course you want to have them dated to after. So if earnings are out that Thursday, you want to have them expiring the Friday right after that, right? So you don't want them expiring the Friday before that week, okay? You sell before earnings are out, sell in the last hour of trading before earnings are released to try to maximize your gains. So the analogy here that I think is really good is, say, you buy Super Bowl tickets and then you sell them, you get them early, you get them for a good price, and then you go sell them just before the game. Somebody that's desperate to get into the field, right, to see their team play. They're going to pay up big time, man. But so that's like selling before earnings. But if you're going to sell those tickets, like you get stuck with those tickets and you're still waiting to sell them and halftime comes, how much do you think you're really going to be able to sell those tickets for, right? If you try to sell tickets to the Super Bowl at halftime, when half of the game is already in the books, maybe it's even a blowout. Maybe, once in a while we get a Super Bowl, it's a blowout, right? So I think the last one was it Seattle and Denver? That was a blowout, that Seattle blew out Denver. But, you're not going to be able to get much for those tickets at halftime. So that's kind of like selling the straddle or the strangle a lot of times after earnings. is like, okay, it happened. Oh, they beat on EPS and they missed on revenue. Oh, okay, we know. Oh, the analyst said this, the analyst said that. And the stock kind of maybe does a whole lot of nothing after some, whipsaws and stuff like that. And so the strangles get smoked. And if you would have held, you lose money. Sometimes it doesn't happen like that. But the idea here is that you're not taking the risk of the stock not doing much after earnings, right? So you're selling those Super Bowl tickets before the game instead of selling them at halftime. Does that make sense? Okay, Chad says this is his favorite one so far. Okay, cool. So that's what we need to start doing more of, Chad. All right. So how to replicate this, or how to implement this? I said I would say that at the end, but we'll talk a little bit about it right now. So you look at an earnings calendar. Guys, there are tons of free sites out there that have earnings calendars on them. We'll talk about a couple here in a second. You look at the earnings calendar. You don't want to look at stocks that they don't have good liquidity. You want to look at stocks that have good liquidity and their options also have good liquidity, which shouldn't be too hard to figure out if you look at an options chain. You want to see high open interest. You want to see daily volume in all of the strikes or most of the strikes that are at or near the money. Okay. And, you just use the timeline that I just explained. So use 10 to 14 days before earnings are announced by at the money straddle or, strangle, and sell it right before earnings come out. All right. Any questions on this one? So you might say, well, why the heck are you talking about something that that you haven't really done that much? Well, because I've kind of back tested it. I looked and researched it, and it's like, it's too good not to share just because it hasn't become one of my favorite strategies. Well, just because it hasn't become something that I've actually implemented that much yet. I think it still warrants me sharing it with you, right? So I hope you guys would agree. You forgive me for it not being something that I've used a lot yet, but I'm going to. All right. So let's move on to the next one. So forward splits. So forward splits are great. Historically, they're great indicators of a stock that's really strong, that's going to continue to go up. And so what happens is when you get into a stock that has a forward split coming up, if you're a stockholder of record on the is it the EX date? So anyways, if on the date of record, right, for that forward split, if you're a shareholder, what will happen is that you will get a free share. Now there's different ones, there's 1 for 2, 1 for 3, whatever. But like the one that I'm in right now is Trex, and TREX. And so basically what they're doing is they're going to give me 1 free share for every share that I already own. Okay, so I don't have a ton of money in it, but I get a little chunk of shares. And so I'm going to get a free share. Now, when that forward split triggers, of course, the stock price is going to be different. But any value, any uptrend in the stock after that is just, pure, almost like free money, right? So what it does is, you guys have probably had, if you've been penny stock players like me, you've probably had some really bad experience with forward splits. Don't raise your hand. You can just nod your head right there at home, because, I know that we've all experienced reverse splits thinking, oh man, well, the company just needs to do this so I can keep their stock listed on the NASDAQ. Oh, they just need to do this, to clean up, to shore up the outstanding share count. And, we've all been hoodwinked by these CEOs of these penny stock companies, because it just never seems to work out with reverse splits. Sometimes you will get a nice short squeeze. I know that after reverse split hits, because it does clean up the share structure for a little bit. But what happens is the company starts diluting again to raise money for operations. And so the CEO can, pay his monthly payment on his yacht. I'm just kidding, but, who knows? And so they start diluting into that share structure again. And that's why you have the perpetual nosedives if you look at, say, a weekly or monthly chart of a penny stock, because they continue diluting even after reverse split, after reverse split, after reverse split, after reverse split. So the polar opposite of a reverse split is obviously a forward split. So the psychology behind it is totally different too. It's totally opposed to that, total opposite. So the psychology behind a forward split is that you have a good company that wants to reward shareholders. They're making money hand over fist. Their earnings and revenue is growing. It's a great company. It's got great management. The only reason they're going to do a forward split is to reward the shareholders, right? I mean, it's just a good company. It's a great company for them to do this. So example is Baidu. They did one in 2010. And I'm so glad I made a mental note of that because, you know, it's always been something that I've looked for since. Now, they're not too often that you see forward splits. When you do, you need to take note because a lot of times they end up as really great investments. So you might say, well, I don't want to hold anything for 5 years. Well, you know, I don't know if I want to hold anything for 5 years either, but just look at, you know, say, I believe it was right here, right in this, in May, in the spring of 2010. So let me make this chart a little bit bigger. Okay, in the spring of 2010, you see where the price tags say $65 and $82 right there, right around that time frame right there. So you can see the stock, you know, in just about 6 to 12 months, basically doubled from there. Went to 165.96 up there in 2011. So, you know, and that's in addition to getting a free share, right? So, yes, the price structure changes, but I mean, it's a tremendous way to kind of hack a stock to get, you know, free shares in a company that's doing good, that the market is most likely going to reward with, you know, continued buying pressure as a result of their great management team and great business that's behind the stock. Okay. As I said, the most recent example was Trex. This is where I found it on my morning news feed back in May 7th. And it says, I highlighted it in blue, the portion that I want you to see. It says, our board of directors has approved a 2-for-1 stock split of the company's common shares. The stock split will be in the form of a stock dividend to be distributed on June 18th, 2018 to shareholders of record on May 23rd, 2000. So we know May 23rd is in the books. That was like last week. But, and then, you know, they won't be distributed till June 18th. So that's when the price of the stock will change. And then if you own the shares, you'll see that you'll have double the amount, although it's, you know, at half the price. So, you know, essentially what it does is it makes it more appealing for more people to invest in the stock because the price per share is lower. So for a long time, people wonder why Priceline didn't do something like that because their stock, you know, is like $1,500 a share or whatnot. But anyways, that's kind of the psychology behind the forward split. It's a really great kind of like a you know, nice trade for say several weeks or several months. Okay, so keep your eyes out for those forward splits. I'll tell you about how to find out when they're happening here before we're done tonight. And then Hack 5, of course, this is, you know, one I've really been doing well with this year and last year too. Overall is the weekly oil trade. So what you do basically is just go with the trend, guys, after the 10:30 a.m. oil inventory report out on Wednesdays. The exception is a week like this week that's holiday shortened, so there's not coming out until Thursday at 11 a.m. But most weeks it's Wednesday morning at 10:30 a.m. Eastern time. So what happens is they release a report that tells you, okay, if oil inventory, the barrels of oil had a build or a draw. A build means there was more oil barrels put into inventory than there was drawn, which is bearish, right? Because that's more supply than there is demand. Same thing for distillates and the same thing for gasoline itself. So the market usually has a pretty good reaction to that, at least the oil markets and oil service stocks. So XLE is the ETF for oil drillers. And so how I first initially started this strategy was buying a strangle just before this information came out. But I found that it was just making it a lot easier. As you can see right here, this is a 40% winner that I took notes on. This is from last year, from October. So when I improved the strategy by only buying calls or puts based on either a bullish or a bearish trend after the report. So it's just a lot less stressful that way. I don't have to deal with, you know, 4 trades. I only have to deal with 2. And, you know, it's so much It's so much nicer. And so here I started doing that. As you can see here, I bought calls here at 75 after a bullish inventory report. I kind of jiggled around for the rest of the morning and into lunchtime, and then ended up having a nice move up after 2 o'clock. I sold that one for 15 cents. I'm sorry, for 50% gain. I aim for 30%, but it doesn't always work out like that. Here's one where I bought the 7650 XLE puts here at 68 cents. You can see, so 1030 was, you know, let me try to make this a little bigger. $10.30 is right about here. So I can see, you know, the inventory came out, gives a little spike higher, but, you know, I usually don't like to buy within the first 2 or 3 minutes after the report and see what's really going to happen. And so sure enough, you know, it reversed lower. So I went ahead and bought myself some puts, and it came and made new lows within, geez, this was a really quick one. This one didn't even last an hour. Sometimes they take like 3 or 4 or 5 hours. But this one was really quick. Sold them at 88 for a quick 30% as it began. Because the hack here, guys, is that the trend that is established from that oil inventory data is strong, because that's big data. It's very, very, it takes the air up. It sucks all the air up out of the room, right? For at least for that particular day, in my opinion, on oil prices and oil-related stocks. Okay. Another one, bought XLE calls here at 90 cents after a bullish reaction to inventory reports. As I see my notes here, not the greatest entry. Basically sat on a sideways trade, was down a little bit, as you might imagine, right here in the middle, right just before 12 o'clock. But the stock did rally, or I'm sorry, the ETF did rally in the afternoon and sell it for a 10% winner. Here's a 33% gainer. Like I said, try to get 30%. Doesn't always work out like that. This was just before 1 o'clock, so about a 90-minute trade here. So you can see the clear trend established post 1030, guys, right? They're pretty cut and dry, but you have to understand there's a method to it. It's not just because I'm looking at a chart and it looks like a bullish trend. It's because I'm looking at a chart and it's a bullish trend, and I know why. Okay, and I know why. And why, the why is the news. The why is the inventory report that came out. It was either good or bad, or you know, mixed. Sometimes it's a mixed report. Sometimes there'll be a draw in oil barrels, and there'll be a build on gasoline and distillates. And so it's like, how the heck do I read that? You know, how to make heads or tails of that? Well, all I do is follow price action. But I do try to stick to days where it's only where it only has this stuff, where it only has these catalysts. Okay. Michael says, how far out are the strikes? Oh, great question. So, like, say for example, on this this XLE trade, I bought XLE calls here at 75. So those would have been the $70 calls. I see some guys in my VIP group where I send out all these alerts every week. They buy, like, you know, a little bit out of the money. I like to go a little bit in the money. I don't know, just because it has a little more intrinsic value. I mean, it probably doesn't really make that much of a difference, honestly, because we're in and out before the closing bell. But that's what I choose to do. So I just go with the strike that's just barely in the money. Because at least I know that those calls have some kind of intrinsic value to them. At least they're not all time value to them. Okay, and they expired that week. I guess that was really your question, wasn't it? Yeah. So they expired that week. They expired that Friday. Yeah. So I mean, it's, you know, these options are going to move one way or the other. There's not a whole lot of time value in them. Expired that Friday. Now here's one that didn't work. I don't want to mislead you and think that they all work. Last week it got whipsawed. Bearish report came out, and I actually went ahead and bought some puts pretty quick after the report came out, probably about 3 minutes after, because oil was trading so crazily. And so I thought, well, man, this is gonna be follow through right here. So sure enough, it starts to trickle down. I think, okay, boom, there it is. I nailed it. Nope. So it whipsawed, and then of course you saw it last week. What happened the rest of the week is that it tanked, but hey, it is what it is. And I got whipsawed out here and bought at 82, sold at 54. So I don't know, 35% loss there. So you have to be willing to take those. The good news is that was the first loser in 10 trades. So it was 9 out of 10, 9 out of 10 last 10 trades with this one. Here's the example of the alerts for these weekly trades, these oil trades, I call them. Here in the VIP room, it's a private Slack group. I post the chart. I'll post my executions. So you can see that I'm not just, not actually trading. I do actually trade this with my own money. And spell it out there for, plain English for everyone to see. Okay, David says, do you have a video that demonstrates a live trade or that explains the reading of going with a call or put, as well as deciding the strike price that you purchase? No, I don't, but I guess I need to make one. And then I can edit it and make it all snazzy and put some music to the background and everything. So yeah, I'll put that on my list, David, to get that done. Thank you. It can be kind of boring a little bit because sometimes you're just waiting for the follow through after you buy the calls or puts. But hey, that's the wonder of video editing, right? So thank you for the suggestion, David. I will do that. All right. Any other questions on this one, on the oil trades? Okay, David says this screen is a good example. Okay, cool. Chaz says, with this example, what was the strike? Let me try to zoom in. This was a 68 call option. So just barely out of the money a little bit. 59 cents. So I bought them at 59, sold them at 78. All right. Any other questions on this one, on the oil trades? The cool thing about these guys is that it's not something random where, like, all of a sudden it's a trade. Oh crap! I'm driving. I need to pull it. It's like pretty much know every time one of these trades is going to occur, which is usually on Wednesdays. Like I said, this week it's Thursday because of the shortened week, but it's really neat because. Okay, I know I need to have my mind right. I need to be prepped and I need to be focused for my oil trade on Wednesdays. Okay. So hack 1, remember that was the upgrades, and we talked. It's not just small caps, but I did allow a lot of small cap examples because they're a lot of fun. They can have more of a percentage gain than say a big cap. But so what you can do is you can use a paid service like I do, like briefing.com, and I do subscribe to that every year, and it's, I don't know how much they charge now, I forget, but I do pay for that, and I think it's worth it. But if you would prefer not to use a site like briefing.com for your upgrade and downgrade daily list, you can use a free site like Benzinga, and they have every morning they have a free list. I think MarketWatch, you can go marketwatch.com. They have a free list of upgrades and downgrades. So yeah, you would want to check that. Oops. Check around 9 a.m. Eastern. So all the new upgrades and downgrades for the morning should be posted by 9 o'clock. Sometimes they come out like 10 after 9, but most of them have been put out by 9 a.m. Sometimes the really good ones, the real market movers, are out real early, like 6:30 in the morning. So by 9 a.m. you're pretty much good to check through them all. Just look for, you want to look for the reputable analysts. So you want to look for, the firms that you've heard of, and go with those. You want to, obviously an upgrade, you want to try to look at that stock for a potential bullish trade. For a downgrade, you want to look for a potential bearish trade, with the caveat of paying attention to the overall market behavior. Okay, so the market's just in beast mode and you're trying to short stocks off of downgrades, you might have some problems there. On the flip side, if you're trying to buy stocks off of upgrades and the market is weak, you probably have some problems there. So, there is a nuance to it. Realistically, it's probably works the best in, kind of a real low volatile market, at least for the bullish trades. You want as much juice in those upgrades or downgrades as you could possibly get without the overall market weighing down or buoying those stocks. Yeah, so David says, so does that mean the strike price is 68, but he bought for 59, and the price went up above his strike price and he sold at 78? Yeah, well, see, the strike price was $68. I bought the call option for 59 cents. And then when it went above the strike price, the option was worth 78 cents at that point. And so that's when I sold it. All right, so I know it's a lot of numbers to throw around and everything. So, but yeah, basically, David, you're right. So let me go, actually, before I talk about Hack 2, how to implement that, the binary events, let me show you guys, let me show you my list, my kind of notes for this. Let me switch my screen one more time. Bear with me here. Right here, click share. All right, so the upgrade and downgrade strategy. So this is some notes. When I first started taking notes on it, thinking like, holy smokes, I need to start taking notes on this, see if this is a viable trading strategy. So the first one that I noticed, this is last month, April. So I took a screenshot of the drop with a Dropbox. I use the Dropbox app, and it's really cool for saving screenshots without bogging down my computer with 8 million screenshots. So this is a screenshot of the downgrade right here. You can see that, right? From Morgan Stanley. And then this is a chart of the action afterwards. You guys see, okay, there's a big gap down, but again, this is the stock had moved up hugely into that. So it's not like it was oversold already. And so it has a nice gap down, but still had plenty of downside after the open. So you guys can imagine, shorting that or buying some put options as it's around 264. It went down 10 more points, right? It went down 264 to 254. Now, yeah, you'd have to, probably make a move within the first 5 minutes of trading, but still, that's a huge downdraft. And that was the only news for the day, was the downgrade. It was not the day of earnings, okay? So that's a sustained downtrend from the opening to closing bell after analyst action. Twitter upgrade pre-market April 17th. Again, Mr. Morgan Stanley, you guys can see that. Twitter upgrade pre-market from underweight to equal weight. And this is the chart of that day's action. All right, so notable upgrade on the morning of April 17th. Plenty of sustained momentum throughout the day from 29 to 32-ish. Great opportunity to go long stock or calls. And of course, it gapped up the next day too into the 32s. So huge upgrade right there. on Twitter. Just a great trade. Feels like forever ago now. But yeah, so that was last month. So huge, right? Let me see, who was that again? Okay, Morgan Stanley. Yeah, so like Morgan Stanley, JP Morgan, upgrades and downgrades, Bank of America, usually pretty good, guys, as long as they're on the same day of earnings. And then you have Tractor Supply here. Piper Jaffray, they're a big analyst firm too. Some of you may never heard them, but they're a big firm, trust me. So upgraded Tractor Supply. I actually made a trade with this one because I saw how this could work on this strategy. Small gain. So I said my notes here is that I ended up making a small gain. So let's see. I used a different app for the screenshot. So let me open it up. Okay, so that's like huge. Let's see if I can zoom out. Nope, it's not working. Okay, so you can see, anyways, I know it's kind of big, but pre-market upgrade stock fades off the highs as SPY weakens. But you know what? Just because it fades off the gap higher doesn't mean it's not going to go back up, right? So sometimes you have to be kind of, savvy and not jump in right after the opening bell if the market's weak, because, sometimes stocks do like to sell off of gap ups. But sometimes what they like to do is go right back up after they consolidate, and that's what happened with this one. And I think it went into the mid-60s a few days after that. So actually, it was the following day when it got a nice bid. So sometimes these play out as 1 to 3 day trades too. I should note that. Okay, so these aren't always going to be a day trade. Grub was downgraded pre-market April 25th. Here's the downgrade. Right here. I don't know who it was that downgraded it. Okay, so I made a trade with shares. I shorted shares at 97 with the limit order, made a small profit, cover on 95 with a stop loss. Good thing because the stock ended up reversing higher. I chose to single this one out because it wasn't a huge gap down like the earnings related stocks. So basically, I thought to myself, this had some meat on the bone to go down because it didn't gap down huge. So sometimes there isn't a lot of pre-market action in these. And what the sellers or buyers will do is they'll just wait to come out of the woodwork after the opening bell because they know they can get, a more full order book. They can get better executions for large orders. Okay. Here's a chart. And let's see here. So trade window for Grub downgraded, made a few bucks as I shorted from 97-ish to 95-ish. You can see that right there, and that's the hourly chart. So pretty whippy, but the opportunity was there, and money was made because I used stop loss after I was in the green. Did not have screenshots of the proof of the trade there because I was on vacation. So Regeneron, not Region. Regeneron, so this is downgraded May 1st. At Guggenheim, another analyst shop, not well known, but they're not scammers or anything like that, so you don't have to worry about that. Just shorted 25 shares at 302, so it was a high price stock. So I figured, hey, let me just I just want to dip my toe so I can get some action here, and ended up shorting some shares and making a small profit. Alta downgrade May 2nd. Pre-market from Loop Capital. This is one I never heard of them, but it still ended up working as I shorted some shares from 248 to 246. Let me just kind of roll through these. So this is the dual upgrade one. I already showed you the chart during the slide presentation, and then this one is BAS was upgraded. This is a penny stock. Made a little bit of money from $13.87 to $14. Shop upgraded May 9th, 2018. Bought those at 630, sold at 7. First Solar upgrade. Bought at $2, sold at 270. Carrizo oil and gas stock shorted shares at 300, or I mean at 26.61. This was a loser. This was my first loser out of 11. And Snap upgraded pre-market May 21st. I'm actually still holding those small position of shares at 1096, and I'm down a little bit on. So hopefully you guys can see that, you know, that these upgrades and downgrades are really actionable. And let me switch back to my slides here. So get this correct window open. So, okay, so what resource do I use for upgrades and downgrades? Again, it's briefing.com, a free site like Benzinga. You want to check around 9 a.m. Eastern time. There's some other ones that are probably a lot cheaper than briefing.com that you can join. I think one's called MarketBeat, if I remember correctly. So yeah, you want to check that every morning around 9 a.m. You want to look for the big notable upgrades, downgrades, and go from there. So hack 2 was to look for the binary events. So what you want to do is you want to go for this. I'll send you a link here after the webinar. I'll send a kind of like a recap email tomorrow, and or maybe when I get the PDF transcript ready for you guys and the recording and everything. So what you want to do is you want to go to this website called Forex Factory. Like you could just Google it right now if you wanted to, guys. Google Forex Factory calendar. And what you'll do is you'll pull up a page. It's this one. This is the URL, forexfactory.com calendar.php ? And what that'll do is it'll list all the binary events for that particular week that are happening all over the world. So there'll be a lot of things on there that you need to ignore, but there won't be anything on there that you'll miss, with like the exception of the Supreme Court ruling for the gambling stocks, because the Supreme Court doesn't tell you exactly when they're going to pass down their ruling. So that was one of those things where you kind of had to, you know, have an ear to the ground. But for everything else, it's going to be listed on the Forex Factory calendar. All right. Hack 3, that was playing the straddles and strangles before earnings and then selling them just before earnings happen. Remember, I use the analogy of the Super Bowl tickets. So you get the earnings calendar, like again, a site like Briefing or Yahoo Finance has a good earnings calendar. There's sites like Earnings Whisper. You can follow their Twitter account, things like that. So you can plan out those trades as earnings season approaches. And the good thing is that it's 4 times a year that we get to trade earnings. So you want to do that on good liquid stocks, say like Apple, JP Morgan, Goldman Sachs, you know, the biotechs, the big biotechs, things like stocks like that. All right. And hack 4 was the forward splits. So there's on the NASDAQ site, they have a really good, just a little table. If you Google NASDAQ upcoming forward splits, it should pull up that page right there. And so that's the URL though, NASDAQ.com/markets/upcoming-splits.aspx. And you can also use something like set up Google Alerts. If you have a Gmail account, you can set up an alert that'll be sent to your Gmail account every time Google finds a search result that has something dealing with a forward split. Or you can go to Twitter and type in quotes forward split. And you'll probably have some spam, these pumping numbers that are on Twitter, but you'll probably find what you're looking for. Actually, I don't know. You may not. Twitter's kind of Wild West. But if you use NASDAQ.com, you'll definitely find the upcoming splits. All right. And then hack 5 was the oil trade. So you watch for reaction in XLE. I don't recommend USO, the oil ETF, in case any of you are wondering about that, because the options are on the liquidity on the options and the spreads are terrible. They're terrible, like Charles Barkley would say. So you want to stay away from XLE. I'm sorry, you want to stay away from USO options. So you watch for reaction XLE after the weekly inventory report. Once it picks a direction, you want to buy or call or put around 15 minutes after and ride the trend with an ideal target of a 30% win. Okay. Now, if you guys want, you guys can if you want to know, like, get, the alerts from now on as far as any and all of these trades, like I said, we'll be sharing some of them with you. But if you guys want to be a part of my VIP trader group, like I shared this screenshot a few minutes ago, where I post all the stuff right in here for everyone to see. You can download the app to your phone and see all of it right there. Plus, I'll send you text alerts. You can go ahead and give Eric a call. My friend Eric is who I'm partnering with. And you can call him at 1-800-648-6230. And he will discuss the VIP trader group with you and see if we'll be a good fit to work together. All right. And so now I guess we'll take some time for Q&A. It's been an hour and 15 minutes. So I've already covered a lot of questions, but if you have more questions, we'll cover them, and then I'll send you guys on your way, and I'll send you the recording, and I'll be in touch as well with some actionable trade ideas here in the coming next few weeks. So who has a question about the upgrades, either about the upgrades, the straddles and strangles, the oil trades, or the forward splits? So David, I hope I answered your question about the upgrade and downgrades, where to get the information. And so everyone is still pretty much on the class that started out on the class. So if you guys maybe got a question, just go ahead and type it in. Don't be shy. And okay, so if you're new to options, okay, great. Okay, great. I'm glad you mentioned that, David. So David is new to options. So where do you go from here? So where you go from here is, assuming you have a brokerage account open already, where say you could buy stocks, is you could do one of two things. You could go and say start trading the upgrades and downgrades just with stock to get comfortable with the strategy there, or with the oil trades. Or what you could do is just go, if you feel comfortable in doing this, I would recommend it. If not, then just do the stock for a while, but the shares for a while, is go ahead and request an upgrade to your options trading account, or to your stock trading account, so we can trade options. So like, for example, with E-Trade, you would want to request level 2 options. So level 1 is not going to do anything for you in E-Trade, because all you can do is write covered calls. You can't do diddly squat with that, except, well, write covered calls. So you guys need to have level 2 in E-Trade to be able to buy calls and puts, naked calls and puts. Don't worry, you can't lose more money than you put into a trade. It's not like some people sell calls and puts, and so they could potentially owe more money if a trade goes haywire. Like if they sell puts on the market and the market rallies. I mean, if they sell puts on the market and the market tanks 5,000 points, like they'll be screwed. I mean, they'll like have to move to Jamaica or something and hope the authorities never find them, because they owe so much money to their broker. But if you're just buying, that's all I do, is I'm just buying, right? The exception would be a spread, but that's hedged, where I might buy a call spread on Apple, where I buy the 190 puts or the 190 calls and sell the 195 calls. Yes, I am short calls, but I have a long position of calls to protect that position. So. Okay, Michael says, please show how to implement hack 5 again. Sure. So you simply watch the reaction in XLE after the inventory report. If I had to say as a magic number, guys, a magic time to place your trade, I find myself usually placing the trade around between 10:40 and 10:50 a.m. Eastern time. So I try to give it 5 to 10 minutes-ish to process, give the market time to process the inventory report and make a decision as to whether or not it wants to go higher or lower on the XLE ETF. And then once it picks a direction, I either buy calls if it's going up and looks bullish, or buy puts if it looks weak and is going to go lower. I ride the trend with an ideal target of 30% win. Does that mean sometimes I've left trades on the table where I could have, made 500%? Yes, it does. But it also means that there's some trades where I've locked in a 30% profit where if I would have kept holding on to those calls or puts, I would have lost the entire position. So if you want to, I've taken them where I want to manage it to where it's like a weekly thing where it's almost like a little income stream where I can do every week where, sure, it might skyrocket, faster than I can put in a sell order, but most of the time I'm just going to shoot for a 30% win. Chad says, does the cost of option determine your stop loss? Like 45 price, 40% stop, but 350 is a 30% stop. Not really, Chad. Not really. I guess it could, right? I mean, if it was super cheap, if it's say a 10-cent option, which is just a lotto option anyways if they're that cheap, but I wouldn't set a stop loss at 7 cents, if it's a 10-cent option. So yeah, I can see a little bit, Chad, where that might come into play. Okay, Joe says with options, Ameritrade is better than E-Trade. Other than that, I'm not sure. Okay, and yeah, you're probably right about that, Joe. I also use Interactive Brokers mainly, though. I was just using E-Trade as an example. Patricia says, do you use XOM for oil trades? I used to, but I just found that XLE was a more steady performer up or down. I found that XOM sometimes, if XLE was higher, XOM would be maybe, if XLE was up 1% of the day, XOM would be only up 0.5%. So it started to become kind of like a laggard. So I had to jettison it as the trading vehicle for this weekly oil trade last year. Do you always sell your options before expiry? Yes, because I don't want to be assigned the stock. So I'll do my research. Let's see. David, I can send you some videos on the straddle and strangle, or I can just do a new video for all of you guys on the straddles and strangles. So if you guys had to vote which one you like the best, which strategy you like the best, which one is it? Would it be the upgrades and downgrades? Would it be the binary events, straddles and strangles? Would it be the straddles and strangles pre-earnings that you sell just before earnings? Would it be the forward splits, or would it be the oil trades? Just curious. Is there a favorite, and you guys like them all? I mean, what seems like the most fun, or the most like has the most potential? Chad says oil. David says to me it'd be XLE and then upgrade downgrade. Yeah, in the last few trading days, the upgrade downgrade strategy, I haven't found any new trades, but there's like some weeks where it's like every day it's like, man, I really want to make this trade. Don says the oil trades. Okay. Oil. Patricia says oil. Plus, oil's kind of nice too because we all have to put the gas in our cars, unless you guys are driving electric cars. So it's kind of like a way to get revenge on our gas prices, right? All right. Anyone else? So yeah, and anyone here? Is anyone here in Trex for the forward split besides me? TREX stock. I had a lot of people sign up for the class before that date so they could get, because I was sharing the information on the stock. Michael says Hack 3 looks most interesting to me. Okay. I'm going to have to agree with you, Michael, because I haven't really used it that much yet. That's why it's most interesting to me. So we don't have an earnest season coming up many times. I think we're kind of like in the tail end of the most recent one, but won't be long. David says not me because it was too expensive. Okay. Patricia is okay, cool. Oil trades, pre-options. Okay, David Fitzgerald. Okay, cool. Hi, David. Okay, guys. Well, if you're already in the VIP trader group and you're here on the call tonight, great. If you're not and you want to, call my friend Eric at 1-800-648-6230. I believe you can call him right now. Not call him tomorrow. I don't think he sleeps very much, but you can give him a buzz and he'll go everything with you. He's a great guy, and looking forward to working with you guys more closely in that VIP trader group. And also, guys, stay with an eye. Keep one eye open on your email inbox for me over the next couple weeks, because I'm going to send you guys some stuff that's kind of like an added bonus for being a part of this class. And of course, I'll send you the replay too tomorrow. I'll send that to you, first thing before lunch. I'll have you the replay. Okay. So before lunchtime tomorrow, East Coast time, I'll have you the replay link, and then I'll work on getting the webinar transcribed for you, and then there'll be some actionable stuff. Okay. And the slideshow, Joe. So you want a copy of the slides, Joe? Like a PDF copy of the slides? Yeah, sure, I can do that. Let me make a note of that. So PDF for slides transcript. Okay. All right, guys. Well, I guess we'll go ahead and wrap things up then, and you guys will be hearing from me again real soon, tomorrow, and we'll go from there. All right, guys. So again, thank you for purchasing a seat, and we'll work on making this stuff to where it's just not you kind of like listening to me, and hopefully you took some notes and everything. But I want to get to this point where everybody who has the motivation, where they can take this information and apply it and make some money with it in the good old stock market. Okay. All right, guys. You have a good night. I'll be in touch tomorrow. Thank you.